Thanks for joining us at xm.com for the special report video. We'll be having a look at the yen and whether it's losing some of its safe haven shine. I'm Christina Marujos, and helping me explore this topic today is Marios Hadjikyriacos, investment analyst. Now, Marios, we've seen the yen underperform other defensive assets lately amid heightened risk aversion. Now, one could say that its safe haven shine may be tarnished a little bit. So what do you think? Is it fair to say that the yen is losing its haven magic?
I think it is. So we saw the yen lose a lot of ground in the last week. It has come back since then, but I think it's fruitful to explore why it lost that ground. So the yen is a safe haven. However, there are a couple of exceptions to that. So the yen doesn't act like a safe haven when investors are concerned about the domestic outlook in Japan, and this is exactly what happened this time. So we had a very weak quarter in quarter four. Growth was sharply negative. Everyone was expecting a quick rebound in quarter one, but then we got this whole virus uncertainty, and now everyone's expecting another negative quarter in quarter one, which would be the definition of a technical recession. So given all of this, normally Japanese investors repatriate cash, and that is what is fueling the yen's safe haven ability. But this time, faced with the risk of a recession, they didn't, and instead they cut their exposure to Japanese assets. So, long story short, the yen is a safe haven, but not necessarily so when the problem, let's say, has to do with Japan domestically. Now, another factor related to that, the euro is stealing some of the yen's, let's say, thunder in terms of safe haven appeal. So the euro is becoming a funding currency. What does that mean? It means that interest rates in the eurozone are so low that investors are borrowing in euros and they are buying foreign assets like US stocks. And when something negative happens in the markets, they close their risky positions, their stock positions in the US, and they bring money back to the eurozone. And that generates some safe haven demand, let's say, for the euro. Now, all this time, it used to be the yen that had all of this demand, but now it has some competition. So I think we're likely to see, the yen is not going to stop being a safe haven, but the euro is slowly going to steal some of its haven magic, let's say.
But indeed, the euro posted an impressive rebound lately. Now, one could even dub it as a new safe haven, but is this sustainable?
Well, indeed, we saw the euro post an impressive rebound. That was after a very sharp collapse. Now, is it sustainable? I think it's going to continue over the next few days or weeks. So we saw a recovery in euro-dollar, for example. As long as the market is so focused on virus concerns and the euro is acting like a safe haven, then we could see this recovery continue. However, is this the end of the overall downtrend in euro-dollar? I don't think so. I think this is a recovery, and at some point we're going to see the pair turn lower again. Why? There are multiple reasons. The big one is that there's nothing much to be optimistic about in the eurozone. Growth was very weak already, and it might get even weaker from here because Italy might be facing the risk of a recession soon, and Italy is the eurozone's third biggest economy. Now, additionally to that, we have very limited policy room in the eurozone. The ECB already has rates deep in negative territory. Most governments don't have any fiscal room to do a spending package. So there's a little policy response to be had in the eurozone. So we might see a recovery based on safe haven flows, but I think that dies out at some point.
But all this volatility we're seeing in the markets is very closely associated to the coronavirus outbreak and how all that plays out. What do you think we might see in the next few weeks then?
I think it's going to get worse from here. And the argument is we've already seen some impact of the coronavirus, but we really haven't seen any hard data yet. We don't have anything concrete. So how do I think the next few days play out? I think the number of infections globally is going to continue rising. That is a negative in and of itself. But at the same time, I think we're going to see a lot of multinationals, like huge firms like Amazon, Apple, or who knows, who else revised down their earnings guidance. So we were expecting to earn this much billion over the quarter, but given the coronavirus and its implications, we're going to lower this. That would be a negative for the stock market, and by extension, it would help fuel this risk aversion that we've seen. Now, additionally to that, over the weekend, we're going to get the first data for February out of China, the PMIs for February. Now, I'm not going to speculate how much they're going to fall. They're definitely going to fall. How much is an open question, but I will say this. If you're an investor and you're facing the risk of a very sharp negative open on Monday because of bad data, you're probably going to want to cut your stock exposure before the weekend. So I would argue that today or tomorrow we might see some more risk aversion play out as investors, let's say, hedge their bets before the weekend.
I see. Marios, thank you very much for joining me
Thank you.
today. And thank you for watching the special report here at XM.com.